cost segregation and a cost segregation study, and what is bonus depreciation. So these two things kind of go hand in hand together. So one of the things under the previous administration that came through was something called bonus depreciation. Well, what does bonus depreciation mean? Well, it allows you to take something that was depreciated over 27 and a half years, and you get the bonus depreciation right up front and take all of that depreciation in 1 year. Well, why would someone want to do something like that? Well, the reason you would want to front load all of your depreciation into the first year and trickling a little bit into the second year is you want to create something called passive losses. So if you have a rental property, for instance, and you carry the real estate professional designation, that rental property can spin off passive losses because let's say your rental's $100,000, right? And let's say the land's worth $50,000. That allows you to take a $100,000 loss right up front, right on your taxes. And let's say you made $100,000, right? You've now washed that $100,000 loss against the $100,000 income, putting you at zero income for the year. So that's what bonus depreciation does. Well, how do you do that? You get something called a cost segregation study done. And what a cost segregation study done is the $50,000 that I was using as land value. It has a company that actually comes in and assesses this. What's the land value and what's the building value? And then puts each thing on its own separate depreciation cycle. And each item within the house, so for instance, kitchen cabinets, countertops, closet organizers, landscaping, all these things are on a different depreciation cycle established by the IRS. And so when you go and you segment these things out, and then you're using bonus depreciation starting in 2024 will be down to 60%. This year was 80%, and it drops 20% every year because they're allowing this to sunset. So you need things to be on a separate depreciation cycle. So again, for instance, 60%, you can take 60% in 2024 as a write-off, and then the remaining 40% gets done over the cycle. So if you've taken that huge depreciation loss up front, you're able to write your income down. And that's how you see some of the most wealthy people go and buy big commercial buildings, is because they're creating paper losses. Their bank account is growing, but their losses that they report to the IRS are high, keeping their income tax down. If you have any questions about cost segregation studies or bonus depreciation, go ahead and reach out. We'd love to chat to you more about the power of investing in real estate and how you're able to create your tax liability as low as possible. Thanks. Look forward to talking to you more.